There are 4 things investors need to know about BlackRock Latin American Investment Trust. 1. The trust focuses on capital growth and an attractive total return from Latin American stocks. BlackRock Latin American Investment Trust, BRLA, is managed by lead co-manager Sam Vecht since December 2018 and co-manager Gordon Fraser since April 2025. They aim to generate capital growth and an attractive total return from a diversified portfolio of Latin American securities. The trust has an indefinite life, subject to a 2-year continuation vote. Performance is measured against the MSCI Emerging Markets Latin America Index. When required, the managers can draw on the extensive resources of BlackRock's Global Emerging Markets team. 2. Latin America has above-average growth prospects and is attractively valued. The International Monetary Fund's growth projections for Latin America are superior to those for developed economies, helped by factors such as urbanization, the shift to alternative energy, and an expanding middle class, which is driving demand for premium goods and services. However, Latin America has been out of favor with global investors, and the region now represents less than 10% of the MSCI Emerging Markets Index. As a result, Latin America is very attractively valued on both an absolute basis and compared to other markets. 3. Stocks are primarily selected on a bottom-up basis, and the managers are not afraid to invest away from the crowd. While the benchmark is dominated by Brazil at around 60% and Mexico at around 25%, Vecht and Fraser regularly invest outside of these markets, including in countries that are not in the index, such as Argentina and Panama. They consider that the best way to make money in Latin America is to be patient, invest for the long term, and away from the crowd. The managers seek companies that have positive fundamentals in terms of good long-term earnings growth and cash flow generation, robust balance sheets and well-regarded management teams, and which are trading on reasonable valuations. The resulting portfolio is a high-conviction fund of 30 to 50 positions across the market cap spectrum, although investee companies are generally larger than $500 million to ensure there is adequate liquidity if a position needs to be sold. 4. BRLA has a formalized net asset value-based dividend policy and a discount control mechanism. Since July 2018, quarterly dividends are paid, equivalent to 1.25% of BRLA's calendar quarter-end US dollar net asset value. This policy aims to help narrow the trust's discount by making it more attractive to income-orientated investors. Distributions can be paid out of income or BRLA's revenue and extensive capital reserves, ensuring that the managers are not forced to seek a higher portfolio yield, which may be at the expense of capital growth. BRLA's board employs a discount control mechanism aiming to reduce the trust's discount volatility, favouring a conditional tender offer rather than share repurchases. The current tender offer is for 24.99% of issued share capital, excluding treasury shares, at a tender price of the latest come-income net asset value less 2% and related portfolio costs if, over the 4-year period from the 1st of January 2022 to 31st of December 2025, either of the following was met. 1. The trust outperformed its benchmark by less than 50 base points per year, or 2. The average share price discount to come-income NAV exceeded 12%. Over the calculation period, BRLA underperformed the MSCI Emerging Markets Latin America Index, US dollar total return, by 332 base points per year, and the average discount was 10.9%. Hence, the tender offer was triggered on the basis of underperformance and will go ahead, subject to the passing of the Trust's continuation vote at the 29th of May 2026 AGM. If you would like to learn more about BlackRock Latin American Investment Trust, please visit the Edison Group website.